if you finance a car under the dealership, within 30 days, 30 to 45 days after they get the loan set up, you refinance the car, or 60 days even, make one payment to the dealership, refinance the car under a credit union. And then the credit union now is going to give you cheaper interest rates, which means you're going to have lower monthly notes. They may push your first payment back, a month or so, which means that the first month that you had it under the dealership, you didn't have to make a payment. The second month under the dealership, you might have had to make the payment, but if you refinanced it, it paid off the loan, so you didn't have to refinance it. You might have to put a little money down with the credit union, because that's one of the things that he doesn't talk about, is that even though you might have reasonable credit until you have zero down APRs, you're looking at potentially having to put a little bit of money down to get the loan started up. But once you put a little bit of money down to get the loan started up, they refinance the loan for you, and then uh, utilize, or if they absorb the down payment that you put down on the car, because there's equity in the car when you put a down payment down to buy it from the dealership, you could refinance the car and then push your second or third payment back another 60 days or whatever. And if you had 10 or 15 or 20 credit unions, there's a strong possibility, depending on how much the value of the car is and how often you refinance the car, you could potentially push the payment back quite a bit. The problem with that is that when you're doing these tips and tricks, the positive impacts on your credit score is when you pay off a loan within 7 months of having the loan. So if you get a loan from the dealership, and let's say you refinance it immediately, you hold that loan for 7 months, and then you refinance it with another credit union. And then you hold that loan for 7 months, and then you refinance it with a credit union. If, in fact, the money that you were supposed to be putting down on a down payment is being held to be utilized as no, if in fact your payments are being held and then utilized as a down payment on the next car loan, you could still be paying down the car while you're extending your payments, where you could end up like every 2 months making a $2,000 or $3,000 payment on your car. Uh, it's still a lot, but you can work your way around these things. Now, I thought that was a fantastic idea, but um, if you've got tough credit, you're not getting loans like that. Okay. If you got missed payments, if you missed a renewal date, you're not getting loans like that. So it's not likely that a situation is going to happen where you're going to receive um, more benefits from repetitively refinancing your vehicle without actually making real payments towards the vehicle. You are going to end up having to pay real payments towards the vehicle.